Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me is my co-host, CoinDesk managing editor of Global Capital Markets, Lawrence Luton. Good morning, Lawrence.
Hey, good morning, Christine. How are you?
Have a good weekend? I'm good. Taking a look at the markets right now, they're shooting back up. CoinDesk Bitcoin price XBX index
Yeah.
currently at $42,856. Bitcoin is almost making an advance of 3% for the past 24 hours. And the CoinDesk Ether price ETX index is at, it's over 3,000 now, 3,093. ETH also making an advance about 2.6%. The DFX CoinDesk's DeFi index is at 332, also jumping up almost 4%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So, Lawrence, I noticed, on Friday, it was looking a little down. Meta had that $250 billion in market cap that was just wiped out, dragging a lot of the crypto metaverse tokens down with it. But now it seems to have rebounded.
Yeah, someone decided during pretty thin markets at the end of Friday that, hey, this would be a good time to start buying up and moving through resistance. And that's what we got. We broke through 40,000. And the next resistance level is around 45 or so. Look, this is a very thin market. You can't deny it. Even in the highest peak days, relative to other markets, sometimes it's just really, really thin. So when you
So
have
who's
these kind of
buying
moves,
and making that move?
I don't know. No, really, like
That's
who
the
knows? No,
question.
we don't know 100% entirely that what's driving it, but you know,
Mm-hmm.
we'll eventually find out.
I'm taking a look at Shiba Inu. That's skyrocketing about 26%. They're leading meme coin gains. Tesla also, they recorded $101 million impairment losses from the changes in the value to their Bitcoin for 2021. Let's take a look at
It's
our
a
markets
MicroStrategy.
guest. Oh, yeah.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
All right, so joining us now to talk about crypto markets is Steve Ehrlich. He's the co-founder and CEO of crypto exchange Voyager Digital. Hey, Steve, welcome.
Thanks for having me again. Appreciate being here.
Well, thank you for coming on again. And, I got to ask you, what's the story with the bounce? This thing happened, as I said, it was a very thin market. Christine asked me, who do you think was buying? Shrugged my shoulders. So answer that for her and make us all look good.
I wish I had that easy answer, but it did. It looked really bleak last week. There was really a lack of volume. There's still, as you said, it's not that much volume in the marketplace. And we did see a flight to kind of safety over the last 4 weeks on our platform with consumers going more into USDC. But then over the weekend, we saw this shift kind of start to happen where they were getting out of USDC and buying into Shiba, some of the meme coins, as you guys have pointed out, Shiba and Doge, but then back into, Bitcoin a bit more, Ethereum, but then Solana and Avalanche were two big ones that people started to buy back into. I still think it's light volume. I think the retail consumers are starting to get back in. But I wish I had that answer like you do. Like, I wish I had this, this magic bullet.
Do you think the USDC trade, do you think that was more about staking and more about kind of what was going on in DeFi rather than a flight to safety? Do you think that there could have been some aspect to that? In other words, they're trying to get yields elsewhere?
I believe there's a little of that, but I saw the same thing happen 20 years ago. My time at E-Trade, building that online broker when we had really volatile markets and down markets in 2001. What you saw was people just take a pause and say, okay, I'm just going to hold in dollars back then. Obviously, there was no USDC dollars, and just wait it out and then decide when they wanted to, come back into the market. So we started to see that. I do think it's a little bit, but to get the yield on the USDC. But it is also like, do I really want to take the risk right now on some of these assets? A risk off trade, right? We're seeing it across all markets. It's been a risk off trade. Maybe now we flushed all that out. Maybe Meta was the downside, was where we hit the bottom, and now we're going to rise from there. I've spoken to a lot of folks. Obviously, we're close to Pete and John Nigerian at Market Rebellion and Tom Lee at Fundstrat, and maybe we did hit a little bit of a bottom, and we're going to go up from here.
It's interesting you say because looking at Voyager Digital right now, you guys are down about 20% for the month, but in the last couple of days, say 5 days, you guys are up 15%. Are you guys kind of moving along with the crypto markets?
You know, it's interesting. We see our stock also trades in Germany on the Frankfurt exchange, and we see it up 6 or 7% to start the day overnight. So we do unfortunately trade with the crypto markets, but as I've said so many times, you know, volatility is key for us. When there's volatility, we see good volume. Our assets continue to grow on our platform. So even though crypto assets are down, we're seeing more and more money come in. So our assets continue to grow. You know, based on AUM of retail consumers, I believe we're the third largest here in the States, just in for US
So
customers. And so we're seeing more assets come in.
very good friend of mine owns some shares. She bought it about 20. She's crying to me about the losses that she's taken since. So her big thing is like she's like, what is Voyager doing to fix the stock? Like even for short term, it's a big question. I'm sure your shareholders are asking. So if you could say bullet points, here's what we're going to do to fix for the time being. What do you think it's going to be?
Well, look, I always preach, you know, patience on this because, you know, it is the stock market and you never know, you know, when things go up and down. But that said, 2021, we grew a business from 40,000 funded accounts to over 1 million funded accounts. And we're probably about 1.1, 1.2 at this point in time. You know, so it was scaling and growth, and you have to scale with that. 2022, people have already seen the first version of our debit card. You know, it was used for the first time by our product manager. That's coming soon. Our dark mode, our desktop, more coins. We added, I think, a dozen more coins last week with another 18 of the coins on our platform that are transferability. 2022 is a year of product for us. We're coming hard. We hired an NFT group. So we're coming hard on product. So I would just, to your friend, little patience. These things will take time, but we're coming super hard with product in 22.
So speaking of products, the SEC is right now looking at high yield products that not just you guys offer, but also Celsius, Gemini. What would you say to the SEC? I know obviously it's pending and what have you, but what would allay their concerns about whether or not these high yield products are safe to the consumer, really are not securities, they're not promising? What do you say to all of that?
Look, I think everybody's product is different, and I think there's more guys than what you mentioned. I think it's been reported, but I'm sure the other guys are all having conversations with the regulators as we do. I've been doing that for 25 years with regulators because I've been in the regulated business. What I would say is that one of the key components to any consumer is disclosure, and the people you're holding your assets with, what they're doing with the assets. There's a lot of complex products behind certain parties. We fully disclose everything about our assets. You can look at it on our public filings. So we feel really comfortable where we are. And I know that, you know, this is new ground for the SEC. I know that they're looking at everything, and this is a way for them to understand the landscape. So, you know, I think we're going to have good progress on that in this year.
So does this contrast with
Steve, just
BlockFi? I mean, if you had to contrast it with BlockFi and the likes, I mean, is there anything they're not doing that they should be doing that you guys are doing?
Can't really comment on others because I don't know what they're doing. I'm not there. I know what we do, and I know the disclosure we put out there for everybody to see what we're doing. And by the way, we lost in our rewards program because you get, no matter what we do zero with the assets, you're getting rewards. We lost a lot of money. It's a marketing cost for us, and we lost close to $60 million on our rewards program in 2021.
So just turning back to the markets, we've been having a lot of, well, we broke key resistance at $40,000 now. So just looking at Bitcoin, what's your forecast? Do you see, are we out of the bear market or some more sideways volatility going forward?
What's been interesting is as we've been breaking through some, we were down, I think, at 33, 34 not that long ago, a week or 10 days ago, and we broke some resistance at 35 and 38, but we kind of sit there for a bit. So it's kind of, we break through and then we just static, pricing for a bit, and then we'll look to break through. I think we'll break through a little higher. I think we'll have a retreat a little bit, and then we'll break through higher even further after that. And thinking about it into the second quarter of the year, I think we're going to get significant uptick in the pricing, but it's going to be a little choppy until we get there.
End of year price target, Steve?
I was so wrong last year, but I still believe. I think for this year we're definitely going into the six figures by the end of the year, probably higher.
Wow.
Excellent, Steve. Always a pleasure having you on. That was Voyager Digital CEO Steve Ehrlich. Coming up, a new crypto unicorn. We'll talk to Aleo next.
Hi, I'm Michael Casey, Chief Content Officer and co-host of Money Reimagined. You're watching CoinDesk TV.
All right, let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XBX index at $42,871. Bitcoin is up plus 3% over the past 24 hours. The CoinDesk Ether price ETX index at 3,093. ETH also climbing ahead 2.6% for the day. The DFX CoinDesk DeFi index is at 332, climbing as well, almost 4%.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Privacy-focused Web3 application builder Aleo raising $200 million in a Series B funding round at a valuation of about $1.5 billion. They have backing from the likes of Andreessen Horowitz, SoftBank Vision Fund 2, Tiger Global, and more. Joining us now is Howard Wu, CEO at Aleo. Welcome to the show, Howard. So you have some big backers behind your name now. What was your pitch?
Well, first off, thanks for having me on, and thanks for having me back. I'm glad to be here. On a high level, there was really two main spectrums you can look at layer one blockchains on. Programmability and privacy. When you think about things like Bitcoin, they're quite low on both. Ethereum went one direction to offer high programmability. Protocols like Zcash go the other direction to offer high privacy. But there's really this upper right-hand quadrant of high programmability and high privacy that was missing. And from a market perspective, that's something that's captivated a lot of different areas or different sectors. For example, in DeFi, people are fascinated with dark pools, wanting to deploy those, and also in gaming, people want to build games that are information asymmetric. For example, like Battleship as opposed to chess.
So Howard, you have A16Z backing you, as Christine was saying, and of course, Jack Dorsey has come out critical of them and the likes, and other venture capitalists, because he views Web 3.0 as just being very centralized. What's your take? How do you respond to that?
Well, I think for one that we've seen on platforms like Ethereum that scalability is one of the bigger challenges that are out there today. I think that with where technology is going, we'll absolutely continue to rely on the actual network to settle, the actual network to checkpoint state and to store state. I think one of the interesting nuances that we're seeing is that off-chain compute is growing significantly, and you're seeing that with a lot of L2 protocols that are happening, but naturally as well, people are experimenting on new L1s with that as well. And one of the fundamental core primitives of our tech stack is this technology called zero knowledge proofs. What zero knowledge proofs let you do is effectively run verifiable computations off chain, checkpoint that state, and then broadcast that on chain to the network. And one of the advantages of that is that you get far more scalability than existing platforms.
So Howard, way back when, in the early days of Bitcoin, there was the debate about off-chain platforms, and that basically saying that, hey, if we keep growing the off-chain, it actually will centralize a lot of what Bitcoin's doing, because you're basically concentrating it. You could potentially concentrate it into a few of these providers. So what do you think has changed over the past several years when it comes to off-chain that would make it more decentralized than what the concerns were 7-8 years ago?
I think there's two aspects to it. One is that the technology's gotten a lot better. And what I mean by that is, you know, in the early days, the concept of being able to verifiably execute was first off not very performant, and it required consumers to have, you know, technology that and machines that were simply not practical. You'd need to have beefy servers in order to do that. I think that that's come a long ways from a decade ago. I think that the other aspect that has changed is the fact that availability has gotten a lot better. So with the new designs that these protocols are providing, one of the cool things you can do is, like for example on Aleo, you can take a program that exists on chain and run it locally. Now you can certainly go to a third-party service provider and run it, you know, through them. But one of the interesting things is that you own your data, and so that you can actually run the programs themselves locally on your own machine and then broadcast the result on chain. And one of the kind of nice benefits of that is that if you do see kind of this conglomeration that people are concerned about, of these different companies, you know, kind of merging in and being the dominant players, that it doesn't limit you from actually, you know, participating and running your own state, your own applications yourself, because of that fact.
And so, in order to do this, folks have to sign up onto Aleo and use your system in order to, I guess, get these features of more privacy and more zero knowledge proofs and being able to do all these transactions sidechain. How is that going in terms of community?
Yeah, well, I'm proud to say that we have over 10,000 nodes on the network at the moment. We've hit some really nice milestones on that regards. The other aspect is that there's a setup ceremony similar to Zcash and other blockchains that are using zero knowledge proofs. You know, we have a setup ceremony that we've ran. It is now the largest in history, with 2,200 participants that have contributed to it. And I'd say that in terms of progress, you know, we've made a ton. And at the current moment, you know, there is a thriving ecosystem of community supporters who are also developers building the first types of applications in zero knowledge. So some of the things that I talked about, like games that have information asymmetry, like chess, where it or sorry, like Battleship, where it's difficult to build something like that on Ethereum, but also
Does
experimenting
it
with new
solve
types
the
of
problem
exchange.
of the high gas fees and that kind of thing if it's off chain?
It does address gas fee issues, and the primary, you know, the primary point on that is that you no longer have to execute on chain. You know, Ethereum looks like a mainframe from this perspective, and one of the interesting benefits is that it's almost like a PC revolution, that you can run it yourself now. You can run computations on your own machine, and so if you need to run a program at scale, you can. But additionally, if you need to run a program that's far more expressive than what you know existing L1s can do, you can also do that. So you know, a simple machine learning program that might take 3 seconds to run is now practical in a construct like this. That's previously a challenge because, you know, if you're taking 3 seconds and everyone's taking 3 seconds, well, you're going to slow the network down. And so these are some of the new benefits of this type of technology.
Yeah, Howard, you mentioned asymmetrical games. You just reminded me I forgot to play Wordle this morning. But what are you excited about over the next 6 months? What's in the pipeline that you think we should be on the watch for?
Well, I think for one, you know, we're absolutely going to be launching our mainnet this year, and that's something that I'm very excited to get out there for the world so that everyone can try it and play with it. I think one of the broader themes is also that I think people are waking up to this concept of zero knowledge proofs on the web. You know, Wire just did a phenomenal intro explainer video with a professor Sahai from UCLA. And I think that people are just starting to realize that you can do a lot more with this type of technology beyond just crypto. Even that, just on the web, you can use this to get better authentication, better identity, but also that the applications within the world of finance are also naturally motivated. And I think that these are things that have captivated me, and I think that with this year, a lot of people are going to start to discover this, and I hope that developers will try our stack.
Interesting. All right. Well, Howard, congratulations on the unicorn status. Thanks for coming on. That was Aleo CEO Howard Wu. Coming up, you know, the U.S. Treasury wants to know about your NFTs. We'll check in further with Global Policy and Regulation Managing Editor Nick Day.
Hey there, it's Zach Seward, co-host of The Hash and Deputy Global News Editor at CoinDesk. You're watching CoinDesk TV.
Welcome back, everyone. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Hey, Nick, how's it going? Happy Monday.
Morning.
Good morning.
So let's talk NFTs and money laundering, because that apparently is a concern of the U.S.
It's a thing.
Treasury. Yeah, surprise. Really? Kidding. I'm being sarcastic.
Yeah, no, I think concern is the right word. So we're talking about a report published by the Treasury Department last week, where it's basically looking at the risk of high value art and its use in money laundering. And what the report found is that there's some risk that there is money laundering going on through high value art. Not a lot, but there is some evidence. And one of the emerging risks that it identified were NFTs and their use or potential use in this. It's not saying that, this is for sure happening. It's not saying that this is like a huge, everyone grab your pitchforks. It's saying, okay, here's the thing we're watching for, and this might be used in illicit fashion.
What I found out interesting about your report is that they want to increase monitoring and rules and regulation on platforms like Dapper Labs, OpenSea, SuperRare, maybe turning them into virtual asset service providers. What does that mean exactly?
Yeah, so virtual asset service provider is a term that's primarily been used by the Financial Action Task Force, which is this international money laundering watchdog, to identify crypto exchanges, basically. There's some nuance there. Crypto virtual asset service provider could be, for example, someone sending crypto from a private wallet to an exchange, but essentially they're talking about crypto exchanges. And what they're saying is that these NFT platforms, because they're basically allowing the transactions of cryptocurrency type assets, in this case NFTs, that they may also qualify as VASPs and therefore should be required to implement the same kind of know your customer and anti-money laundering regulations that Coinbase has or that other crypto exchanges have. And basically trying to create some kind of parity here where you have the same strict rules, basically preventing anyone from just doing whatever on an NFT platform.
So Nick, I mean, this is kind of a holdover in many ways from the old days of not the old days. It's still going on in the art business. I mean, in the physical art world, there's plenty of money laundering happening. It's why a lot of times you see these transactions happen on pieces where you're just kind of like scratching your head as to why some artists get the valuations they get. So, I mean, is that informing at least some of the questions that the Treasury is having right now?
Yeah, and I think the real question is what will happen with this report. So this report was generated pursuant to a law passed in 2020 by Congress, and Congress is presumably going to take a look at this report. But yeah, it's clear that Treasury is keeping an eye on this. The next question is whether or not any rules and regulations will actually be either recommended or implemented. But the report didn't have anything specific to NFTs besides, hey, keep an eye on this.
And
Interesting.
we don't want to mention some fun with a stable coin today, do we?
That's another show conversation to be had.
Yeah.
But it's just interesting that they are going after, NFT platforms. The art market has been doing this for centuries. So we'll see what happens. Thank you, Nick, so much for joining us. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. All right, let's check in with Crypto Twitter for our tweet of the day. Will 2022 become the year of the DAOs? Well, take a look at this. WikiLeaks tweeting that more than 5,000 contributors have joined Assange DAO and raised over $18 million US or over 6,000 ETH to free Julian Assange, all in less than 3 days. Hashtag free Assange now. An alternative to GoFundMe, Lawrence.
Oh, yeah.
They won't shut you down, too. If you're in a
No.
DAO. Right, that's it.
Or give your money back.
Yeah.
Hey, truckers in Ottawa, how's it going? Hey.
You may think of forming a DAO. All right, Lawrence, thank you so much for joining me. Appreciate all the time we get to spend together. All right, meantime, check out the hash at noon Eastern and all about Bitcoin at 3 o'clock. You're watching CoinDesk TV. Also, next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
Crypto is back in the green. Welcome to the Daily Forecast, February 7th, 2022. I'm Angie Lau, Editor-in-Chief of Forecast, covering all things blockchain. Well, crypto traders breathed a sigh of relief over the weekend as the market saw its biggest rally of the year. But will that upward momentum continue? We're going to take a look at the market action and a whole lot more coming up. Let's get you up to speed from Asia to the world. Well, let's get started with some of the top stories from around the Asia-Pacific region. First up, the United Nations says North Korea is continuing development of its missile program, and it seems crypto could be the key. According to Reuters, a report submitted to the UN Security Council by independent monitors said that cyber attacks, particularly on cryptocurrency assets, remain an important revenue source for North Korea. Now, January saw the country conduct 9 ballistic missile launches, the largest number ever for a single month. While chain analysis revealed that state-backed hackers stole almost $400 million worth of crypto last year. Meanwhile, Russian crypto miners could face a 15% tax on their income. That's if one lawmaker's suggestion to the government goes forward. According to the newspaper Kommersant, Vladimir Gutenev has proposed a levy of at least 6% of mining companies and at least 15% for individuals. That's if crypto is seen as a security. Now, Russia is in the midst of a debate over crypto, with President Putin backing regulation, according to Bloomberg reports, while the central bank is proposing a ban. Such a tax would be a big deal in the world's third largest mining center. According to a Cambridge University index, Russia was responsible for over 11% of the global hash rate back in August. You can find those stories and more at forecast.news. Well, over in the crypto markets, we are seeing a rebound. According to CoinGecko, the total market cap heading back above the $2 trillion mark, back to historic highs. Forecast News' Lachlan Keller takes a look at what's driving the action.
Market leaders Bitcoin and Ethereum both gained around 15%, with Bitcoin north of the $42,000 mark and Ethereum above $3,000 Monday morning Asia time. One expert told Forecast News that while the market is adapting to concerns over inflation and Fed tightening, here in Asia, the key focus is taxation.
You've certainly got Korea talking about taxing crypto gains. You've got India, as I say, making it more acceptable by putting it into a tax bracket almost. And then you've still got Singapore that's, again, being facilitating rather than necessarily embracing the crypto world.
Sullivan says he's optimistic in the long term, with wider interest in and acceptance of digital assets. Igneous Terranus of exchange Bybit urges caution for the moment, with spot trading behind the weekend's gains and volume still light from the Lunar New Year holiday in Asia.
It's just kind of like a too premature to jump to any conclusion until we see like the derivatives volume back it up. At the moment, there's not that yet, but it doesn't mean that this is not going to be the direction it's going.
Terranus says he'll be keeping close watch over the remainder of the day for a better indication as to whether the momentum will be sustained. For Forecast News, I'm Lachlan Keller.
Tokenomics rather than plain old economics is a phrase that's become increasingly common with the rise of the crypto economy. But what is the fundamental difference between tokenomics and economics? Well, who better to ask than a passionate fan of tokenomics, Henry Chong, CEO of Fusang. Fusang aims to reshape investment markets with blockchain technology. And of course, we're talking about tokenomics here. Great to have you with us, Henry.
Always great to be here, Angie.
Okay, so how important do you think tokenomics is to the digital community, and why?
Well, especially if you're talking about blockchain-based assets, I think tokenomics is absolutely mission critical. Unlike where you have traditional securities, equities, bonds, funds, etc., where you have an intrinsic value anchor, with pure ICOs or utility tokens, you don't have any of that. There is no intrinsic value, and therefore, 100% of the value in the token is because of the token economics associated with it. And I actually think that this is something that the crypto and blockchain-based markets do extremely well. even though these tokens have no intrinsic value, there have been some really innovative ways that people have designed token economics to power a network, and also to use that token to capture value from that network. When you're launching a new blockchain protocol, for example, by definition, if lots of people use the protocol, it has a lot of value. But the question is, on day one, when I don't have users or developers or projects, how do I incentivize people to come and use my network? And I actually think that's one of the core innovations from things like Bitcoin and Ethereum. Not just the technology layer, but the incentive structures. How they use a native token, a token that sits endogenously on the blockchain, and how they use that to incentivize early adopters of the blockchain protocol. So if I come and I'm a user or a developer, I get rewarded in that token. And even though I know I'm coming early before the network really has the kind of scale and direct value, by getting an outsized reward in that project token, I'm still willing to come and be an early adopter. And I think actually this is the single reason that has driven the blockchain world so fast and so quickly, token economics.
Yeah, and what's exciting is also how it's expanding into other territories, equity, for example. Tokenomics of equity differs from that of utility tokens, which you've very simply described with Bitcoin and Ethereum. So how does the tokenomics of equity tokens differ from utility tokens?
I actually think that the future of blockchain assets is to hybridize the world of traditional securities and this exciting world of blockchain-based tokens. There's no reason why you can't do both. I do think that it helps when you have a token with a value anchor. For example, each equity token directly represents shares in the company. By holding a token, you become a registered shareholder of the company.
Yeah, it really is that hybrid effect. And I can't believe that tokenomics still hasn't made it into the Oxford English Dictionary as the rise of crypto continues. How do you see tokenomics evolving to the point where it is part of the common vernacular?
I think the reason why token economics works is because it is based on the same kind of fundamental economic principles and incentives that power so much else of our capitalist economy. The real difference is that, number one, it's obviously digital. I can start to do things programmatically with tokens, but also in the fact that people are starting to use these tokens to really get networks off the ground and incentivize people to participate in a network way earlier than they ever could before. To me, the real promise of Web3 is by hybridizing equity and tokens so that companies can say to their users and investors, you don't need to worry whether the value is getting captured at the token layer because of the network effects, or whether the value is getting captured by the company as equity. This one token represents all of it. You don't have to worry about where the value is being captured. And by buying into this token, you are buying into both my company and the promise of the network around my company.
Henry Chong and Fusang, thanks so much for joining us today. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Forecast Editor-in-Chief Angie Lau. Until the next time.